But yeah, I think this is definitely a strategy you guys can test, like I said, on multiple assets, multiple sessions, really regardless of what session you trade, whether it's CFDs or futures. Like I know a lot of people that trade a variation of this strategy. So yeah, thanks everyone for joining today. I'm actually really excited to share this strategy with you. It's not something I personally trade, but I know a lot of people that trade this and have gotten funded, gotten payouts. And it's a really flexible strategy. It can work on a lot of different sessions with multiple assets, and it's very, very simple. So a lot of reasons that this is a really great strategy I'm excited to share with you guys today. So yeah, like I'd mentioned, this is a strategy I've seen a lot of people trade, and actually also have a buddy who's been trying to like program this. So we've been talking quite a bit to, go back and forth like, hey, I'm seeing this when I'm testing it, and he's seeing this when he's been coding it. So I've got quite a lot of insights. Even though I don't regularly trade this, I know it pretty well and have a lot of good information to share with you. So yeah, like I mentioned, at any points, if you guys have a question, just feel free to type it in the chats. But I want to gonna go over everything, and then we'll also dive into some backtesting, get a little bit of data. I mean, the whole point of these is to really show you, like, introduce the strategy to you. Of course, if it's something you want to trade, I really encourage you to build the 50, 100, maybe even 200 sample size backtest to really get the reps and feel comfortable. But yeah, let's dive right in. So the whole concept with this opening range break is literally like after market opens, there's an initial range that's established. For New York session, what kind of seems like we found is like the first 15 minutes is like a really good opening range to use for Asia and London session. Usually like you want to look at the first 30 minutes. It takes a little bit longer before that kind of initial kind of volatility simmers out. And then yeah, after you have that initial range, all you're looking for is either a 5-minute close below the range or above the range, and you're just kind of looking for continuation for a breakout kind of outside of the range. And so today I'm going to show you guys both kind of New York and London. I might do another stream later going over Asia, but so for New York session, we're looking at a 15-minute orb, basically right after New York opens, pretty much any US indices. So yeah, after you establish the initial range, you're looking for a 5-minute break kind of below or above the range, and just looking for a continuation at that point. I'll show you the exact levels to put your like stop loss and take profit. And then London session, it's going to work best with gold. Like we showed just a couple videos ago, we did the ICT Venom model during London session, and like gold has pretty good volume during that session. So indices are definitely a lot lower volume, so they don't work anywhere. Like I would not trade US indices during London session, but it works pretty well in gold. And then kind of a note, I also know a couple people that instead of using like the true London Open at 3 a.m. New York time or 8 a.m. London time, they also use like a pre-market orb, basically like an hour before. So today I'm testing like during true London Open, but as you backtest this, if you want to trade London session, you could backtest both and see if one produces significantly better results than the other. It's just like a note I wanted to mention. And then Asia session, I don't have any specific examples today. I'll probably do a future stream on it, but kind of you want to basically do the same thing right after Tokyo opens. You'll want to use the time zone for Tokyo, UTC +9, because they don't have daylight savings time. 30-minute orb, gold, Asia indices, I think like the Hang Seng or the Nikkei, it's like JP225 is like the CFD pair. Those are all good ones you could test in Asia, and like I said, I'll probably do a future stream on that. So that's like the basic concept of it. What does this actually look like? So as you can see here, with this, if whether you're using 15-minute or 30-minute, I'll try and zoom in a little bit so you can see better. Whether you're using 15-minute or 30 minutes, you're going to have like an initial candle establishing the range. Maybe this is a 15-minute candle that, opens here, closes here. The low and the high wick are basically what you're going to use for the highs and the low of your range. If this was a 15-minute candle, obviously you're going to have 3 5-minute candles within that window. And same thing, kind of using the wick low and wick high to establish your range. Or for Asia and London session, maybe you're using a 30-minute. So you're obviously going to have 6 5-minute candles in that period. Could look like something like this. And in both these cases, like wherever the last kind of 5-minute candle closes for the range, that would be your close on your 15 or 30-minute candle. So this is basically what the range would look like on kind of the higher time frame, or 15 or 30-minute versus 5-minute. And so what do our actual entry triggers look like for this? So when it comes to the actual entry triggers and where you put your take profit stop loss, so if you're using the 15-minute orb, you can have 3 5-minute candles, and literally like the first candle that closes outside of the orb you're going to just do a market entry at that point. And from my buddy that's been programming this quite a bit, he said like the one standard deviation is like the best level to either trim or take profit at. So we're just going to go for simple base hits today. I'll show you guys a few cases where it may be good to consider holding runners a little bit longer. But so for a short in this case, first 5-minute candle that closes down below the range, you do a market entry at that point. Stop loss is going to be the midpoint of the range. So you can use several different drawing tools. I always like to use this like parallel channel tool because it shows you like the high, low, and midpoint super easy. You could also use like this rectangle tool. I think it has a midpoint too. If you go into the settings, you can enable a midpoint on that too. So those are kind of two options I recommend for kind of seeing the high and low. I guess also you could use the fib tool as well. We use the fibs for the projection. So if you wanted, you could also just use the fib retracement tool and include like the 0.5 line as well. But I think I like the visuals of the parallel channel or rectangles because it draws it draws it across. So in terms of long and vice versa, if we have a, in this case we had a wick below, but there was no closure below the wick low today. Yeah, it's good to learn the mid lines because they're helpful in a lot of different cases. So if you see a wick outside of the orb, you do not enter at that point. You have to see a 5-minute closure. And so this would not be a short, but you would have a long appear after this candle closed above the orb. So same thing, market entry here, stop loss at the midpoint, and we're going to target the kind of 1 standard deviation of the orb. It's going to be somewhere between 1 to 2R. Like 2R is kind of the best you'll get if it like closed just a tiny bit above the orb. But it's going to be like, I think on average, like 1.6 R's, like what I was seeing from the limited testing I was doing. And then a couple cases I did also want to mention, if this breakout candle is too big. So like if you see a really large breakout candle on either side, you don't want to really chase market entry at this point, because if you did a market entry here, it was only like a 0.7 R. And so to make sure that you're entering with good risk to reward in the cases where the breakout candle is significantly large, I recommend using a limit order on like a retest of the orb. And so basically, instead of doing a market entry at this point, you would just put a limit order, set stop loss at the same place, and you would actually have a 2-to-1 potential trade here. The only nuance is if it goes to 1 standard deviation before it comes in retest, just cancel your limit order. Same thing we did for the Venom model. Basically, if it hits your take profit before the entry, just cancel that order because it's going to have less chance of playing out. But this is a good way to still catch these kind of large breakouts without having like too bad risk to reward. So kind of a couple different ways we'll enter. In most cases, it's going to be this one, but there will be a few where we'll have to do the limit order. So go through a couple examples. So 30-minute orb example on gold here that I wanted to show you guys. So in this case, I'll zoom in a little bit so you guys can see, or maybe just make this a little bigger. So we have our Asia range here, kind of before. I just like use the ranges to the session indicators to see which zones. And as we come into London session, we have our first 6 candles, 6 5-minute candles that formed our 30-minute orb. So kind of from the top wick of this first candle, which is basically right at London Open, to the low wick of the I guess the end of the 30-minute candle. So like the first 6 candles that established our range. We had a wick below it, but there was no closure, so we were just kind of waiting. And then finally with this candle right here, we did get a closure below the orb. So you just simply do the market entry at that point, stop loss at the midpoint, and target out 1 standard deviation. So really simple example there, just showing you how a short would play out. I've also got Dow example. So one of the US indices. You could test multiple indices. I just happened to start testing with the Dow just to see. So in this case, there were 2 potential trades. The first 15, we're using 15-minute orbs for the New York indices. So in this case, we had our first 3 5-minute candles that established the orb. We had a closure below this first candle, so we did a market entry at that point, targeting out 1 standard deviation. Unfortunately, this first one was a loss, and then we closed above it on the other side and ended up catching a win. I did also want to mention a couple things. So for backtesting this, one thing, there's actually this like research paper that so like I said, I know quite a few guys that trade this, so they've done quite a lot of research into it. So this research paper that went into the orb traded it slightly differently, but they talked about the importance of the direction of the first 5-minute candle. And so as I've been backtesting this, I've been using a different tag, depending on if the orb breakout is in line or against the direction of the first 5-minute candle. So I've been using just like entry trigger 1. If the first 5-minute candle was red and it closed, if it was a short basically, and vice versa, if the first 5-minute candle was short or was red and we were taking a long. So we're going basically against the direction of that first 5-minute candle, because I think it will be helpful to get some insights and see, like, is it better to, I have a feeling the win rate is going to be a little higher on these entry trigger ones. So I just did want to mention that little nuance. And then secondly, I need to fix this zooming a little bit. So I've kind of figured out a potential invalidation with this. So as I was testing this, I noticed, like, if pretty much at your entry or like very close to your entry, you're sweeping a time-based liquidity level. So a session high or low, a previous day high or low, previous week high or low. These are going to be a lot lower probability. So you probably want to avoid trades where the orb break is like pretty much right at the London low or high or Asia low or high, because oftentimes that's like where people look to, enter for reversals. So these are probably trades you're going to want to avoid. I wasn't able to use that tag in my testing, but I've noticed, like, I think there were like maybe 8 trades that fit this, and like all but 2 of them were losses. So you may want to avoid trades where the entry or like very close, maybe like a mechanical definition could be like if, before the 0.5 standard deviation, you hit a liquidity sweep or you've already gotten one for these session highs and lows, then you might want to avoid those. And then secondly, like just good general rules for this strategy. And these honestly might be good rules just in general with whatever strategy you're trading. We're going to take no more than 2 losses per day. So if it's just a very choppy day and the orb's just not working, we're just 2 losses kind of capping our risk per day. And then same thing after a win, you're done. Like, we're not going to wait for like another orb trade if we catch a short trade and want to catch a long trade after. Just one win per day, and then we're done. So those are kind of the basics for that. And then last thing, when should we consider holding these longer? So obviously, orb is somewhat of a continuation model, and there's definitely some opportunities where it really like just goes. And for the base model, I recommend just going for that 1 standard deviation, but definitely in optimizations, I really encourage you guys to look for some examples where you could potentially hold it longer and try to test out various trailing stop losses to do that. So in this example, trendline liquidity is a really good example when you could potentially hold it longer. So we hit our 1 standard deviation here very quickly, but there was this really nice kind of trendline liquidity that we'd broken down from. And as for those of you that haven't heard of this concept, basically why this is helpful to hold trades longer is, as you look at all of these lows on the way up, these are all levels that people who are long are going to have like a very obvious stop losses. And so as price gets down to here, they're going to have to exit their position, and it's going to like add momentum to the price continuing lower. And so in this case, you could have potentially held this trade for, I think, over 5R down to this like major order block, like basically a demand level down here. And same thing with another example on the Dow. There was this really nice trendline liquidity here, and you could have held this trade for like 2.7R or something instead of the 1.3R or whatever it was in the first place. So a couple of examples where if there's trendline liquidity, like after, I guess beyond your initial take profit, those could potentially be higher probability trades to hold longer. And then another great example is market maker buy and sell models. So this, I'm not going to go too in-depth in this because we have a really in-depth strategy PDF and YouTube video going over this ICT MMXM model. It is fairly complex, but very powerful if you learn it and can start trying to identify it on the charts. So if you can identify instances where you're seeing this like market maker buy or sell model, or if you just like, if you have a really good practice of identifying directional bias, if you feel very strongly about the trend continuing in one direction over the other, that could also be a good reason. And so what this looks like on the chart, like this exact same trade here on gold that we had this really nice continuation, this was like right here. So you can see a very clear market maker sell model. I'll show this like right against this example here. We had our initial consolidation, a few accumulation phases, market shift, and a few distribution phases starting. So if you were able to identify this potential market maker, sell model could also give you confidence to hold this trade, not only longer on this day, but potentially even a higher time frame trade longer. And then like this whole period to the downside, you're gonna like favor like shorts are gonna have higher probability basically. So that's pretty much the bread and butter of the strategy. See maybe one or two questions in the chat, so I want to make sure to answer you guys' questions before I dive into the back test. But yeah, let me know if you have any questions about any of the examples, any of the rules, etc. If not, then I'll kind of dive into some back testing. Okay. So, like I mentioned, I've already started testing this on gold at London Open and also on the Dow, like during New York Open. So I want to try and show you at least a little bit of each. So maybe we'll do like, I don't know, 10, 15 minutes on each, and then we'll kind of look at the analytics and see what insights we have. So I'll start with gold during London session. So same thing, like I mentioned, we're using 30 minutes orbs in this case. So I'll go to my next London session right here. So as we come into London session here, I'll show you guys what I have on my chart to just like kind of how I have it set up. So I always like to use the session indicator by FX Replay for Asia range. So since there's no daylight savings times in Asia range, I want to make sure that this Asia session goes basically from 0 to 7 a.m. UTC, and it's just a fixed. There's no adjustments for daylight savings. And then this session indicator New York you can use for both New York and London session. And how I have it is basically 3 a.m. to 9:30 is our London session, and then 9:30 to 4 p.m. basically is our New York session. And this gives me my really nice session indicator so that I can see the highs and lows for each of the sessions. Some people use slightly different. They start maybe at 8 a.m. Eastern for the New York session, but I personally like to use the actual open at 9:30. So coming into London session, I want to see the first 30-minute candle. So I'll play one candle forward on the 30-minute time frame, shift to the 5-minute time frame, and we've got our first orb here. Also, just kind of pro tip for some of you guys, I want to use this white one. Make sure you save a specific layout for each backtesting session. So come up here to the top, you can make a copy. Maybe you want to delete the drawings you've used for other stuff, but make sure you save a specific layout for each session so that it saves like all your different drawings and everything. And then also whatever drawing tools you want to use, you can use these favorite icons to kind of get this nice, make them very accessible. So I'll be using the parallel channel and the fib tools a lot. So we have our initial orb range here from these kind of first 6 candles of the session. The first candle was red, so if we have a short, it'll be entry trigger number 1. And so simply just going to play forward until we get a closure above or below this orb range. This might just be a kind of choppy day, so I need to actually look at the prices. So if you select the parallel channel, it'll show you the price points relative to where it is. So it's hard to see, but it did close a tiny bit above 950 versus 965. So this is an example. This is going to be a little lower probability. So like I mentioned, Asia high is very close. So there's not really a whole lot of liquidity like beyond this. And so it could work out. Like there were some trades that worked out, but this is one of those examples. I would recommend as you guys start backtesting, maybe come up with a specific tag to identify the trades that are at or very near like session liquidity sweeps, because they're going to be lower probability. I'm gonna record it to see, but this is most likely going to be a loss, just to let you guys know. So it is also entry trigger 2 because the first 5-minute candle was red and we're taking a long, so we're going against the initial direction. So 2 potential reasons why this initial trade is lower probability. There we go. So I think as you backtest this, you could either exclude these entirely or just get the data on them and just confirm. But from what I've been seeing, like when you're very close to the previous session highs or lows, there's not a whole lot of juice out like to really propel this all the way up here. So you might be better just like not taking those trades. See, we got another attempt here. So again, I'm going to record it because it's like I have been, but I would say both of these trades are going to be lower probability for the reasons that I mentioned. So 1.41. So buy market, this is entry trigger 2. And then I also like to use the second attempt trigger because you can get insights on, is there a difference if you take, is it worth taking, two shots at these? So we have a second trade here and 2 losses. So both of these trades could have been avoided if you use the invalidation that I mentioned, or basically if there's a time-based liquidity sweep pretty much at the entry or very near the entry. If you avoid those trades, we're going to see we'll have a higher win rate if we avoid those. So these are two really good examples where we could have potentially saved ourselves from a couple losses there. I've been recording both of these just so we have them in the analytics, but you'll definitely have a higher win rate if you avoid trades like these. So we're pretty much over. Yeah, we're done with London session. So there were basically only these two trades during London session. Both were losses. But again, with the invalidations, you probably could have avoided both of those. So as we came into New York session the next day, we did see some movement to the upside. But now we're into the next day. So 30 minutes, play one candle forward. This is a much smaller opening range. So we can come here. We've got our high, we've got our low. What was the first candle? The first candle was green in this case. So if we have a long, it'll be entry trigger 1. Okay, this probably is a no trade because I think we've already hit 1 standard deviation. Yeah, we already hit the 1 standard deviation. So if this candle had closed, I don't know, maybe at the 0.5 or something, we could entertain a limit order at this point. But since we've already hit 1 standard deviation, I'm not going to record this trade. We'll see what would have happened. Yeah, it just kind of continued to the downside. So you could potentially go for a greater take profit, but you have a huge stop loss here. Like even just to get 1-to-1, you almost need to go to the 2.5, which is like a pretty big move for most days. So this just wouldn't be a trade that I would take. I'm happy like sitting out in these cases rather than having such a big stop loss. So this just wouldn't have been a trade that I took, even though it did break out of the orb and go to our take profit. It just, the candle formations didn't line up with what we're looking for. So next day, 30-minute candle, play 1 forward. Okay, this is also a pretty big range. So we're gonna have a pretty big stop loss on this one. We'll see what we can get. So first candle was, actually I went 1 candle too far. I need to start at the 3 a.m. candle, so a little smaller. So waiting for a closure above or below. We might have the same thing here. So okay, no, this is good. So we have a pretty big candle here. Like if we did a market entry at this point, we would not be able to get more than 1R at this 1 standard deviation. So this is an example where we would want to use a limit order pretty much at the ORB retest, which would give you a 2-to-1 risk to reward. The take profit is just slightly above the Asia high, so this is something I'm okay taking this one. It's really the cases before where like pretty much right at your entry you're hitting that time-based liquidity. In this case, like this is actually a pretty good target to help with our trade. So I'll use a limit order in this case. Our first candle was green, so this will be entry trigger number 1, and we'll see if we get tagged in before it runs to the take profit. It might take off before us, yeah. So unfortunately this time also did not tag us in. We did not get a retrace back to the orb to give us that trade, but I would not want to chase this one because we're already at this high and just didn't hit us. So I'd probably just say like no retest basically in this case. So a couple days we haven't had any trades, but that's fine. We don't want to force anything. We want to just kind of follow the rules and look for the trades that line up with our entry trigger. So we've already got a sweep of Asia low right here. So let me know in the chat. Is this a trade we should take if we get a short? Let me know in the chat. I'm gonna quiz you guys. So if we get a candle, 5-minute candle closing below this, is this a trade that we should take? No. Good. Yeah, so since we've already swept this Asia low, it's going to make this trade lower. That doesn't mean it can't work out. Like there are going to be some trades that work out, but since we've already swept this low, people are already going to be kind of potentially interested in longs at this point, because we've swept the New York low, we've swept Asia low. There's not really a whole lot of nearby liquidity to help propel this further, so a short's going to be lower probability this day. So we'll play forward and see if we would have got a long or a short. Looks like we may get a long. We'll see. Waiting for a closure outside. This is a pretty big orb. Okay, so we finally got a candle closure above. So we didn't end up seeing any shorts anyways. So got kind of lucky in this case. Drag this over so we can see where it was. So let's see. This one may need to be a retest as well. So let's see what can we get at least one to one in this case. So I think we can. Yeah, we can get over 1R with a market entry at this point. And again, we do have a couple highs up here that it would be a little better if it wasn't too far past. But we're coming off this reversal here, so this is a trade that I would take because we're not like immediately at this liquidity sweep like we were in the first case. So I'll place order here. It's going to be a market entry. Our first candle was technically red, so this would be entry trigger 2. So we're going against the direction of the first candle, but like I said, we have context that we can use our minds to help interpret. We have a very simple mechanical model, but you can use your chart knowledge to help improve the win rate with various reasons. So we were in it. We did sweep Asia high and got an initial reaction. We retested and then went up. So as we expected, we did see some sellers get interested once we swept this Asia high. That's why you don't want to enter at this point. But since we are already pretty much in good profit, we came back to break even and then pretty much went right to our take profit. So really good analysis. And like I said, as you build these reps, you'll be able to identify like the trades you should take versus you shouldn't. And just one and done. We're done for the day. So this one eventually took off pretty far. So also kind of a reason. So why is this a potential trade that could have gone quite a bit higher? So another test for you guys. What can you see in the chart here that is a reason why this potentially went like parabolic, basically? Yep, trendline liquidity. So over here on the left, you can see all of these highs were acting as basically stops. Like people who were short here, there's going to be a lot of places here where people would have stop losses, and basically this momentum just kind of, it also coincided with New York Open. So obviously a big influx of volume plus trendline liquidity. This probably wouldn't have been a trade. You would have been able to catch a whole lot more because it did come back quite a bit before that. But just want to kind of reinforce the concepts, like why did this move so suddenly? It was a combination of New York opening and this trendline liquidity that, like, as these people had to close out, that helped propel price forward. So a couple more examples on London, and then I want to show you guys a few New York examples. So next day, first 30-minute candle, playing out these, showing where these 5-minute candles would have been. So that was our open. So pretty small range right here. See if we get a closure below or above. So we got a closure below. We'll put our fib tool right here to project out. And I guess I haven't shown you guys the settings. It's very simple. Just pretty much every 0.5. You honestly only need really the -1. You don't have to go further unless you're looking for trailing. If you're doing an optimization, you want to see like how far it goes. You could potentially use the bigger ones to see. And then I like to just use like one color. I think I turn the background off, turn the prices off. So it's very simplified. That's basically all I have for the fib tool. So we do a market entry at this point, stop loss at the midpoints, targeting out 1 standard deviation. And our first candle was red. So this is entry trigger number 1. So markets, entry trigger 1. Let's see what we get. Okay, nice win. So did come back and retest the orb. If this is something that I was going to deeply backtest, definitely another optimization I would also do is only doing orb retests. So it's going to vary a little bit asset to asset, but instead of getting 1.5, 1.6R using a market entry, it may be better to only use orb retests. You'd have to like do the analytics to see. I've got a really good resource in the Discord on how to do optimizations, and you guys could test that. But if I was going to trade this and backtest it personally, that's something that I would definitely look at, because you could potentially get a fixed 2R for every trade instead of the 1.5, 1.6. So you have to kind of see, do you miss it? Do you miss trades that makes it not worth it, or does it improve the profitability? You can kind of test and see. So that's probably good enough for London orb. I want to show you guys a little bit with the New York session. For those of you that trade New York session and want to trade indices, I've also been testing this a little bit. And so, like I'd mentioned, you want to have separate layouts for each one of these, but everything else I have in the chart is the same. The go-to, I just basically am going to the open of either London or New York session for these. So I'm going to go to next New York session open and see what our first 15-minute orb looks like in this case. She might have already played out. Let me see. Do we have our 3 candles? No, this first candle was just huge. Okay, this is a huge orb. We got a huge orb, big influx to the upside. We are coming up into some news that didn't really do too much. So let's see if we get a break out at either side of this. There we go. So we swept a few session highs, and we're starting to form a reversal here. So I'm pretty comfortable taking this trade, even though the stop loss is pretty big, to be honest. It's the only thing I don't like about it. Like our one standard deviation is, is all the way down here. We do have both London lows and New York lows, so there is some potential liquidity below that I think we can definitely look for potential targets. So if we did a market entry right here, stop loss all the way here at the 0.5, and see if we can catch. It's a 1.22R, so I'm okay with it. And then what was the first? The first 5-minute candle was green, so this is going to be entry trigger 2 for the back tests. So let's see what happens in this case. Playing things out, coming back a little bit. Got a pretty big retracement after we hit London lows. And we're pretty much at the end of the day. So let's see, we got a couple more minutes before New York closes. Pretty much right there. So I'll probably just close this one early. Like if you're trading CFDs, you can hold through close, but with futures, you like have to close it at New York close. So I'll probably just close this at the end of the day. We didn't quite hit our take profit. Did sweep the London lows, which could have been a trim, or maybe you want to go break even at that point. But yeah, there was potential, at least one additional low, a little bit lower, and this London low wasn't hit like for quite a while after our entry, so it wasn't one of the ones that would fit the invalidation criteria. It was more just this orb was huge, so it takes a bigger move to actually hit the targets. So I'll go to New York session. Let's see where our first 15-minute candle, and let's see first 3-minute candles. We have 1, 2, 3 right here. This is a much smaller orb, and okay, this is a little bit more of a tricky one. So we have swept London highs, but we also have New York high right here. So depending kind of how big, if it were to close above, we could potentially still take this because the one standard deviation is not too far beyond New York high. So it really depends, like if the breakout candle, like, or if the candle like basically takes out New York, then it might be lower probability. But since we do at least have another point of liquidity beyond, versus if it was just like this, if we only had kind of this London high, I definitely wouldn't take any longs. It's just, again, a little context you can use to decide if it's worth going for. And this like probably would be a case if I was trading this personally, if we started to see a big reaction or rejection after this New York high before our take profit, maybe you go break even at that point, just kind of save yourself from potential reversal that could be happening. But I think otherwise this could be one that we could take. Let's see if we can get 1R, pretty much exactly 1R using market entry. So I'll go ahead with that. So buy markets, entry trigger 1, I believe. Yeah, the first candle was green. Entry trigger 1. Let's see if we can get up there in time. Nope. So yeah, we got our reversal prior to New York highs. It may come up there at some points, but yeah, was a little less probable just because we were already a little bit extended, kind of taking these London highs. So let's see if we get a second attempt. Okay, we could potentially take a second attempt at this. And again, for the same reasons I took the first one, I'd probably be okay taking this because we have not yet taken this high. The only thing, I guess, I'm getting really advanced here, but maybe so the Dow didn't sweep the New York high, but if you saw the S&P or the NASDAQ sweep this high, then you have like bearish SMT divergence. It's another concept I go over in some of the strategy PDFs. That could also be a reason not to take this. But since we still have this liquidity here for the Dow at least, we can potentially see if this works as a second attempt. So place order. This is going to be, again, entry trigger 1, but second attempt. Worst case, we have 2 losses this day, which is not the end of the world. We ended up catching a nice win. So hopefully talking through that logic is helpful for you guys. Like, I want to explain to you what I would do in these cases, and this is a little bit of a nuance versus like the very clear examples where we're seeing very clear invalidations. We did still have some liquidity a little bit higher in this case, so there was potential more juice to look for in this case. So that would be a reason I would take that one. So see if we can find a few more trades, and then we'll take a look at the analytics. So next day, actually want to take a moment and see if we can find any like MMXMs. I don't do this super often, so just want to see if we can find anything. So I actually might need to go to the daily time frame for this. It's hard to tell like what time frame to go to, but we may have one. We just gotta find the right time frame. All right. Ooh, this is interesting. Again, I don't want to go too far into this, but if you were looking for the market maker buy or sell models, which one do you think we have more likely on this daily time frame. Do we have a market maker buy model or a market maker sell model? So they look like this. Do we have a market maker buy model or market maker sell model? What are you guys seeing here? The examples I had here basically look like this. So there's initial consolidation, a few phases to the upside, a few phases to the downside, or vice versa. So a couple people say sell model. I would agree. There's definitely a market maker sell model. We have some initial consolidation, multiple accumulation phases to the upside, and now we were starting to see some distribution phases. So we could potentially have a sell model with targets all the way down to this initial consolidation. I will also say it's a little less clear, but there was also a market maker buy model. So we had some initial consolidation up here, and it wasn't like super clean, but we also had multiple distribution phases to the downside, followed by multiple accumulation phases to the upside, targeting back to our initial consolidation. So actually we're both models in this case. But this is daily time frame. We're trading like 5-minute time frame, so honestly the daily time frame is not going to be the most helpful. Like these are like larger time frame moves. I think like 1 hour or 4 hour is probably going to be more helpful to give you more specific context. Maybe 4 hour. I think that's what I was seeing on gold earlier. I'm not really seeing anything super clean with the 4 hour. It's pretty much like kind of trendy price action. The daily time frame was much more clear. But yeah, just wanted to kind of show you guys how to potentially look for those, because again, that could be a confluence you look for when you're doing that. So all right, so let's go through maybe one or two more examples, and then let's see, I want to make sure I go to New York session. All right, so first 15-minute candle. Let's draw out our opening range. It's these 3 candles right here. Again, pretty big orb. This may be another reason we don't want to take this, because the opening range is pretty huge in this case. No closures above yet. We got wicks above, but no closures. Okay, now we finally have a wick above. So we might need to do the same exercises we were talking about before. Like, is this something we actually want to take, given that we're coming into these session highs, which, you know, people start looking for shorts at that point. So do we have a reason to take this even after it sweeps maybe London high, Asia high? We're trying to get all the way up here. Is there, you know, do you think we should take this trade versus considering it one of our invalidations? So Matty says he sees some trendline liquidity. Does anyone else agree? Do you think this would be a trade we should take or not, based on the kind of invalidation we talked about? What do you guys think? All right. So I agree with Maddie. We do have some additional liquidity above. So even if we are very close to this London high, this Asia high, there's a lot of reasons to potentially propel this price quite a bit higher as we've swept this trendline liquidity, even this local trendline we've kind of broken out of. So this is not only a trade that I would be happy to take, I would also potentially even hold it all the way to these New York highs to catch like a little bit more. I just need to check to see, is this going to be a market entry or a limit, depending on if we can get more than 1 hour. So I think we can get more than 1 hour to the 1 standard deviation. So I would take this trade. The first candle was green, so this is entry trigger number 1. So we'll enter here and see what happens in this case. All right, so we're in profit, and guess what? Took out that New York high. So again, it wouldn't have drastically improved the results in this case, since we did market entry, only 1.43 R versus 1.09. But hopefully this is helpful for you guys to like understand, like, you know, you might have this very mechanical model, but if you can understand actually a little bit more what's going on and what are some supporting reasons why the price could actually go further or not. So, like, it's going to help you understand price action more and feel more confident in your setups if you're seeing some multiple confluences and stuff like that. So I want to check over to the analytics now. So I actually, in the strategies page here, I made a ORB opening range break strategy. And then I went into each of these 2 sessions and I added this strategy to both of these sessions. So I can look at the analytics for all of them, kind of all at once. So if I go into strategies here, I can just click the analytics button. And so this is all the trades that I've tested, both with you guys and also just on my own. Actually 60 trades that we've taken a look at. And overall, we got about 17.5 R. I think I tested this. I don't know how far I got on gold, maybe like 1 month on gold. And then I tested another couple weeks after that on the Dow. So trading these two assets on a different couple different sessions, we got 17.5 R, a little over 50% win rates. However, like I mentioned, I was recording all of these like invalidated trades that we shouldn't be taking. So I think like most of the guys that I've been seeing trade this are seeing more of like a 65% win rate is probably like a better long-term average. Again, as you backtest this, hopefully you can kind of confirm that over a larger sample size. And then let's take a look at, I guess, yeah, we had 1.5 R on average were the wins. Let's take a look at the difference between entry trigger 1 and entry trigger 2. So again, going back to our makeshift strategy PDF. I'll have the PDF for you guys a little later. So we recorded entry trigger 1 if the breakout was in line with the first 5-minute candle, and entry trigger 2 if it was against that first candle. So let's see if our thesis is right that the entry trigger 1 had a higher win rate. Okay, it wasn't huge, but yeah, we did have a slightly higher win rate with the entry trigger 1 versus entry trigger 2. And most of the profits came from this. I think 11.5 of the 17.5 R that we got was from this entry trigger 1. Let's take a look and see if the second attempt trades were worth taking or not. Nice. So definitely worth taking the second attempt trades. So if you have a trade that fails and then you see another one, you could definitely take this. And I would say this includes, so even now that we have this invalidation, this would also be like a quote unquote second attempt, like based on how I was backtesting. So there was an orb break, and then we had a second break. So this would technically be like a second break of the orb that we were taking. And so we were seeing that probably because of a lot of these invalidations, the second attempt trades were a lot higher probability. So I think, I don't know, if you wanted the absolute best results, so 16.5 R with 60, just the second attempts alone are really good. Let's see if we do entry trigger 1 or second attempts. Let's see what the results look like. Nice. So win rate's a little bit lower and still like almost 19 R, so a little bit more profitability. But yeah, this is something you guys can play around with as you get larger sample sizes. Decide like, do I maybe only want to take trades that line up with that first breakdown, or maybe if it's second attempt, I'll take it like regardless. That's something you can play around with. I don't really have super decisive information. From the only thing I know pretty confidently is we don't want to take these kind of invalidation trades that are when we enter them, or like shortly, pretty much right after, they're taking a time-based liquidity without anything after that. But yeah, I think this is definitely a strategy you guys can test, like I said, on multiple assets, multiple sessions, really regardless of what session you trade, whether it's CFDs or futures. Like I know a lot of people that trade a variation of this strategy. So I'm curious now. We'll take a look at some of the other, oops, I deleted everything on accident. So let me pull back my orb. All right, so let's see if we have any other insights from any of the other information. So yeah, overall we saw a 50% win rate. It's not surprised the max wins versus max losses were pretty similar. Took about the same amount of sells and buys. Buys were slightly higher win rate, but again, that could just be what the market was doing during this. I think this was like September of 2023. I tried to pick kind of a random point in time. Maybe if you like are available to trade multiple sessions, you want to test these assets on different sessions. You can see, do the win rates vary? It looks like, you know, the slight period we tested on gold was a little higher, but we also had smaller sample size. Like I tested like 43 trades on a Dow and only 18 on gold. Pretty similar average, about 1.5 R on average. And yeah, mostly because we traded in, we had more trades in New York session. The profitability was a little better in there. So I'm going to change the time zone to UTC -4 so it lines up with New York. And then let's see if we get any insights about like when the orb breaks happen. So taking a look at the trades by hour, it looks like for the most part, like the first 3 hours of London is kind of when most of the action's happening. The 5 o'clock window was pretty much break even. There were 3 wins and 2 losses in this case. The first hour was a little lower win rate, but still profitable. There just isn't a whole lot going on in the last couple hours. So if you only want to trade the first 3 hours of London session, you probably could get away with that. It looks like, again, I'm just showing you what I'm seeing now, but as you get larger sample size, you'll have a lot better picture with this. So flipping over to New York session, interesting that orb breaks like pretty much right after New York Open. So we have that basically 9:30 to 9:45, like that's when our orb is established. If there's an orb break within that 15 minutes after, we actually are negative in that section, and it could be because of the invalidations. It could be for a few different reasons. Maybe if we apply some filters above, this will improve. But it's something that it might be better to wait till after 10 for the orb break, because we have quite a bit better results. And the same thing, it looks like it may not be worth trading the last couple hours. Maybe just focus on the first 3-4 hours of New York session. I'm actually curious now if we filter what we had before, so entry trigger 1, maybe if we only look at the second attempts, we'll see if because that'll clear out most of the invalidations. Yeah, there actually like weren't any trades in the 9 o'clock window. So I think most of the trades that were causing that bad result in like the 9:45 to 10 window was probably because of those invalidation trades. So even though the overall analytics showed that 9 o'clock hour wasn't profitable, you can use your tags and stuff to try and figure out like why is that. And it was probably because there were a lot of those invalidation trades that happened like pretty much right after the orb was set up. Win rate by day, again, not going to spend a whole lot of time on this because we would want a larger sample size to really feel confident about this, but it does seem like Mondays may be a little less profitable than some of the other days. Tuesdays and Wednesdays look like really good days for this. I can't really remember off the top of my head the data from the other guys that trade this, but I think there may definitely be certain days that are better for the orb than others. And as you get larger sample sizes, you'll be able to maybe decide, okay, I don't want to trade the strategy on Monday or something, for example. But yeah, hopefully you guys enjoyed this strategy. I'll have the strategy PDF, if you guys are watching this on YouTube later, it'll be in the description below, and then we'll also share it in the Discord. And then probably in a future week I might run a Asia session testing out some of the either gold or the Asia indices. But yeah, I hope you guys enjoyed this. I think this is a really great strategy that a lot of you could backtest and see. It's simple enough that a lot of people can trade it pretty easily. Like I said, there are a few nuances on invalidations, when to use limit order versus market order. But overall, I would say this is one of the simpler strategies that we've tested. So I think it could work for a lot of people, whether you're beginner or a little more experienced. And then I see a question from Jamie. So is your Venom backtesting video somewhere? Yeah, we have a free strategies channel in the Discord. I can link to you real quick. Copy link. So we have this free strategies channel in the Discord, and if you go, we pretty much all the strategies that we've tested that have seemed promising. We're putting the strategy PDFs in there. All you have to do is like click the link and enter your email, and it'll send you the PDF for free. And then also when the video recordings come out, I'll put those in there too. So you can look through all of those. And then we also have you can filter them, if you want to, look at ones that are swing trading or intraday or have ICT concepts or certain sessions of the day. You can kind of apply some filters and see different ones too. But yeah, we have Venom model, which a lot of people like too, so you can definitely check that one out. So yeah, I don't think there's any other questions, so we'll wrap it up here. But I hope you guys enjoyed learning this orb model and can kind of test it out and see what you guys find with different assets and everything like that. So let me know if you guys start backtesting it. If you have any questions, like would you have taken this trade or not, let me know in the Discord and I can kind of let you know. But yeah, hope you guys have a great rest of your weekend, and I'll catch you later. See you guys.